I guess first question, what is premium financing?
Premium financing is a method employed to finance life insurance premiums, typically for large life insurance policies, for typically affluent people or ultra affluent people that do have the ability to pay the premium, but would prefer to use the dollars that would be normally paid for premium to reinvest in their business or investments. And usually people that are used to using leverage. And so instead of paying $1 million a year for 10 years, as an example, the client would pay $40,000 or interest of 4% on $1 million.
And what makes Verite different than other companies in the premium financing space?
You know, we've been in business 10 years. As you know, I've been in the premium finance business for about almost 20 years. And I think we've finally, perfected the way that we do things. So I think the experience of working with Verite is different than working with the other premium finance vendors. We're very, very high touch. We are compulsive about taking care of our advisors, clients, people we're working with, people that refer us business. We have a renewal system that starts about 60 days before the anniversary to make sure everybody's in line by the time when the bank renewal comes up. But what we do on an annual basis, among other things, is we monitor the performance of the policy versus the performance of the loan and make sure they stay intact with each other and they're tracking each other. And if they're not, then we need to make an adjustment. Fortunately, very infrequently are we making adjustments. We also have we have a full-time banker, Kathy, who was the senior account manager for Wintrust. So she knows the banking and the lending industry inside and out. She's been on both sides, which gives her a big leg up in terms of how to manage the entire process. And we've got terrific design people. We're very conservative in the way that we approach premium finance. We don't want any blow-ups. And so, the combination of all of that. But I'm fond of saying, which sometimes works and sometimes doesn't, working with us is experiential. That once you do business with us, we very, very infrequently lose any business. We have a 0% lapse rate. And so it's experiential. I know that when I am a consumer, I love feeling taken care of. Whether I'm going in to buy a suit or whether I'm going to market, I like the feeling that whoever is waiting on me really cares and wants me to have a good experience. And we track that in our business. Same thing.
When does it make sense to utilize premium financing?
I would say anybody that's contemplating a premium of $100,000 or more. In premium finance, especially in our business, $100,000 a year of premium is relatively small. And small deals sometimes are not competitive because the banks aspire to doing business with larger transactions. So I would say 100 to 300,000 a year of premium for 10 years is on the low side, but definitely worth looking into. I would say 300 to 750 a year is sort of the lower end of the upper market. And I would say premiums over $1 million get the most attention, work the best. The banks like big deals. And so knowing you're a golfer, every time you take a golf lesson, they say less is more. In premium finance, more is more. The bigger the deal, more is more. The bigger the deal, the more attention it gets from the lender.
To do premium financing, what's the process? What's the timeline? How are these deals done and how long do they take from beginning to the end?
They take a while. I don't know statistically exactly what the averages are, but they take a while. I would guess that the average premium finance case takes about 5 or 6 months. We have cases that are going to take a year. So it's a combination, really running simultaneously of underwriting the life insurance. And so you go through the normal underwriting process for the life insurance, the medical, the designs, all of that stuff, and then simultaneously or somewhere near, you're tracking, getting the loan approved, gathering all the client's financials, getting the loan approved, or having somebody pass during this period of time when the two might be mismatched. The ideal is that the underwriting for the insurance and the underwriting for the loan are done simultaneously, but it rarely works out like that. Most times the underwriting is running ahead of the loan. And the reason it takes so long is not anything to do with the bank or the insurance carrier. It's just that rich people have stuff going on. So, you're missing a couple of things, then the guy's on safari for 3 weeks, so you're 3 weeks behind. We've got a case now that we've been working on, I guess, close to a year. And it's not that anything's wrong. The guy's just a really rich and very busy. And so, every week, every month, we get another piece of it, and now we're getting ready to close it. Just takes time.
Why is it important to have a monitoring process as it relates to premium finance?
Because a lot of the transaction is based on the return. There are 5 risks that we talk about in the premium finance transaction. One of the biggest risks is a lack of performance in the policy, and running head to head with that is the interest rate on the loan. So when we design our policies, we are increasing the interest rate currently using the Bloomberg forward curve, which is the most recognized form of predicting interest rates by financial institutions. And then what we do is we run the return at age 49, and we also run we run a double stress test, which says that in the first 2 years you earn 0. And we also run it by something called the 100th percentile, which, without going into a long-winded explanation here, says if I bought this transaction for any 20-year rolling period over the last 40 years, what would my return be 100% of the time on average? And so what we want to make sure is that we're taking a look at where the interest rate is moving year to year, and we want to make sure of what the return on the policy is. The ideal is to keep a spread between what we're paying in the bank loan and what we're earning. And so far it always happens, but if it doesn't, that doesn't mean the deal fails. It just means it may need to be monitored and corrected. Usually that correction comes into putting more money in or more collateral. Since we're going to be 10 years old next month, and we haven't had any blowups. We've had a couple little bumps on the road, but we haven't had any blowups.
Who can qualify to utilize premium finance? Is it open to everyone, or is it a select group of people? How do you qualify to use premium finance?
The definition is 5 million in net worth. The reality is the sweet spot's 25 million in net worth and up. But we are doing, we've just recently closed a deal in Vietnam, and we're doing 4 people involved with the Vietnamese company. And each one has a special situation. So in one case, the CFO of the company, U.S. citizen but resides in Vietnam, doesn't have the net worth to qualify. But this company is going to have a huge liquidity event happening in a short period of time, and the CFO is going to be entitled to getting probably between 10 and 15 million dollars. So we spoke to the carriers and we spoke to the lenders, and they signed off on it. And then we have a couple other people that are very young that work for the company, some who work for the company or board members here in the U.S. And all these deals are relatively small deals, and but the clients have potential to be very wealthy, so it's justified in putting it together. Okay. But usually 5 million is the bottom.
Then, with the agents, can any insurance agent do premium financing? Do they need to work through a specialist like yourself? And how do they get compensated?
We are considered to be a financial intermediary. We sit between the advisory community, the banks, and the carriers. This is, as you know, I speak a lot around the country. Yeah. This is a business of nuance and iteration, meaning that you have to do a design and then do another design and do another design, the iteration and nuance, because the little things, you don't know what you don't know. And in premium finance, there's a lot of things, if you don't know, you get in trouble. We have been in situations where agents have called us to work with us. We take a piece of the commission, typically between 30 and 50%. And agents sometimes, as you know, don't want to pay. And so they go it alone, and we've recommended that they don't. So we've had more cases where the agents went alone and came back after they failed and said, maybe we could resurrect it. But like anything else in life, if it's dead, it's dead. It doesn't get resurrected. So it's basically a joint work business.
Gotcha. And then where do you see the premium finance and marketplace in the future? How do you see it progressing from here?
It's funny. I just answered that for my Crump presentation too. So I think it's really robust. I think it's really healthy. I think it's growing every year, as evidenced by the fact that more and more banks are getting into it. And so the hesitation in my voice, if you hear it, is that when anything in financial services becomes hot, you get wannabes, pretenders, and people like that. So we've run across a bunch of bad players, some really bad players and some bad players. And so my only concern about premium finance for the future has to do with reputational risk as a result of bad players being in the industry. But in terms of the pure transaction and the desirability of the transaction, it's growing by leaps and bounds every year.
Right. Michael, what are the sources of your business? Who do you work with?
So it's really interesting. So historically, the vast majority of business was generated by high-level insurance professionals that had clients that were in need of premium finance, and they needed to find somebody to work with. More and more, what we're finding is that centers of influence, primarily CPAs, trust and estate attorneys, family offices, people that consult to the very high net worth are coming to us directly on behalf of their client. and getting referred to us in various different ways and saying, we have a client, we think premium finance is the right avenue for them to take, we'd like to work with you. And then as a result of that, some of those centers of influence are making direct referrals.
I've heard that the foreign national market is heating up. Can you tell us a little bit about that?
Yeah, so the foreign national market is heating up, specific to specific geographic areas. So we currently have deals pending in Luxembourg, Japan, Hong Kong, Colombia, a couple of deals in Colombia. So what we've been finding is that more and more inquiries from advisors that cater to the foreign national market, some with nexus to the U.S., which is preferable to those that don't have nexus to the U.S. And so the market is definitely heating up. We just closed this case in Vietnam and getting ready to close 2 or 3 other cases in various parts. We thought it was going to be Latin America specific, and it's actually turning out to be more Asia than Latin America. The Asians seem to have an affinity for life insurance and premium finance, and they move quickly. So yes, the foreign national market's definitely heating up.
Great. Well, Michael, thanks for your time. This was very informative, and as always, we appreciate everything. Thanks.
My pleasure.